Hey, welcome in to the Real Estate Scoop. This is your weekly update where we get into what's really going on with the real estate market in Hampton Roads. And we are actually bringing you more information about how you can actually be a buyer or a seller in any type of market that we're actually in today. You already know who my guest is going to be on for this episode. It's going to be my favorite loan officer, Oscar Avila. Oscar, how you doing, baby?
I'm doing pretty good, Craig. How about yourself?
You already know, busy weekend, getting up to the start of this week. We're going to get this done because I'm going to be watching the national championship game tonight. So we definitely want to get in here and get the
Yeah,
information out to the people and basically just talk about what's going on in Hampton Roads right now. And we have a little payment examples that we're going to talk through that Oscar brought that I just blows my mind about what some of these prices are looking like on homes and what the payment is going to be like. So this is some of the things that you want to hear, you want to talk about, and it's always to understand what is going on with you and how this is why you want to talk to a lender about what your payment situation is going to be, because things like this is where you want to make sure that you don't have any detractors that keep you away from either purchasing and how this is actually going to affect sellers on the other end. So Oscar, let's get into it a little bit.
got it. Yeah, so when it comes down to that, one important step for you to do is talk to a lender to figure out what monthly payments you're kind of comfortable with. Because when you shop online and you go on Zillow or Redfin and you're looking at these homes and you're like, oh, monthly payment says $1,500. You got to know that those mortgage calculators aren't correct. They're probably not up to date with the current market's doing. They're probably not factoring property taxes or insurance. So that's why it's super crucial to get in contact with a mortgage loan officer. That way they can kind of dissect that information for you.
So in this episode, we're going to be focusing strictly on VA loans because Hampton Roads is a heavy military a heavy military centric town where we basically want to make sure that that's where most of the loans are going to come from. They're going to be mostly VA loans. Obviously, we do conventional. We also do FHA. We offer all the brands of loans, but centrically focused, VA are one of the main ones that we see a lot of ratified contracts come in on. Is that accurate, Oscar?
Yeah, I would say. Mostly everybody in my inner circle is. I just recently got out the military, so everybody I know is from the military. So
Right.
that's the kind of loan products that I get mostly is VA loans.
So, and for those who are unaware what this loan product is, Oscar's going to correct me if I say something crazy. So, don't worry if I got a disclaimer on the side of me right here. But when it comes to the VA loan, it's zero down for any military service member, active duty or whatever, right? But when they actually put this, they actually go in, they have to put the earnest money down, and they may have to bring money to closing. Depends on if they cannot get seller concessions. But this is like one of the best products on the market, because you don't have to deal with PMI. You do have to deal with a small funding fee, but if you're you have any type of disability rating from the military, you can actually get that funding fee waived as well too. So it's almost like not even paying for that either, which can be a great savings on your veterans loan. So we're going to break down just Oscar brought to numbers today, right? And we're going to use this median price. Man, I can't even believe we're having this discussion. We're going to bring this median price sales number into as of November 2022 of 300,000. We're just going to call it 300,000. It's actually 299, 900, but we're going to call it 300,000 for even sakes. And Oscar, if including that funding fee of 2.3% for a first-time VA user, because that funding fee actually goes up if this is your second time, third time ever using it. It just gets a little bit higher on the fee, right?
Kirk, on that, actually, if let's say you're active duty, right? If and you use your VA loan twice, it actually lowers the funding fee.
Really? So
Yeah,
the second time it doesn't go up or it goes down?
it goes down. Yeah, it goes down.
So from 2.3 to 1.2 or something like that?
I believe it's 1.6. Don't quote me on that. I need
Oh,
to
okay.
redo. I need
Right.
to do my research on that. But yeah, from 2.3 goes down. It goes below that.
So the first time you pay the bigger funding fee, and then after that it gets the chunk of how much you have to pay into it goes down a little bit.
Yeah.
Gotcha. Okay, so that makes sense. I had it the other way around, so that's even better. Okay, so the loan amount with the funding fee of 2.3% for the first time VA user is $306,797. So we're going to call it 307 $100,000. Okay.
Okay.
All right. So based on Oscar's numbers, we have a 5.625 interest rate for the VA loan if you have perfect credit, 780 and above.
Yep, 780, and that's with like it might get a little, it might improve a little bit once it goes above 780, probably like 800, probably improve, but not by much. And that's also with like a 40% debt to income ratio too.
And how often, and I mean, I know you only had so many cases so far where you're actually working with someone, but how many of those actually have less than 40% debt to income ratio?
It just depends. Like it depends like what how much home they're trying to shop for. You know, if they're trying to, you know, max out their budget, then they're gonna have a high debt to income ratio. But I mean, it's just like it's like 50-50 really when it comes down
Gotcha.
to it.
Okay, so let's run through the numbers right here because I'm already just looking at the total payment amount on a 780 credit score for 300,000. Folks, this is $2,100.
Yeah, yeah, it's up there.
$2,100. Oh, okay. So now that's with, and this is basically he gave us the tiers for each one of these credit scores, right? So 620 with a debt to income ratio of 40%. 620 is about average credit score, right?
Yeah, I would say. I mean, I would say average is probably like 680, 650. I would say.
Okay, so 650 to 680. I'm gonna say good is 650 to 680. I would imagine 620 to 650 is
Oh,
about average.
yeah, because Craig, the reason I didn't put 650 on there because once like from 780 to 650, it was around the same interest rate.
Really? So
Yeah,
with 680, you can get it. You can get that interest rate about 5.6.
yeah, it was like right there with 5.6. So that's why I didn't include that on there because it was already kind of the same. So I wanted to see what would, bump up the interest rate, and 620 is where it started bumping up the interest rate.
That's interesting. So okay, so we go from 5.6. So you can actually, this is how detrimental your credit is, actually, folks. If you think about this, the 620 credit score with a debt income ratio being the same, about 40% on the same $300,000 house, you have a 6.125 interest rate versus 780, well, or 650 to 780 is about 5.6. That's a hell of a lot of difference in interest rate.
Yeah, yeah, it is a pretty big difference. That's why, the most important thing is just, take care of your, your credit score, because the better your credit, the more cheaper it is for
You
you to
know, that you
borrow
can
money.
live with. So what I will say is then you have the payment at 2229 for the 620 credit score. So it's about $100 payment difference right there, right? So based
Yeah.
on the difference in interest rate. Now the poor credit score of about 580, which 580 is about the lowest that you can actually go to qualify for a VA loan. Is that, or it just depends on the situation?
Yeah, so with like I know on in the broker world, 580 is the lowest we can do. Like when it comes to VA, we can also do FHA, but we're talking about VA right now. And when it comes to conventional loans, we can do 620.
Okay. So in that payment with everything included is 2354. Now, my question to you is, Oscar, we've talked about this a bit. So 780 is 2131, 620 gets you a 2229, as 580 can get you a 2354. What type of home is people buying for $300,000 in this type of environment? I guess it's the question to ask when it comes to Hampton Roads.
Yeah, I mean, it all varies really. You can have a single family home that's $300,000, or you can have a really nice like townhome and it's $300,000. It just depends. Like it just whatever kind of home that you're looking for and what kind of, I guess, style of home that you want really.
Well, and that's the thing that me and you started this conversation on when before we came on air was like, hey, like this is actually one of those things where it's going to make people pause for a second. Like it's going to give people sticker shock. Like this is real sticker shock when you think about it at these prices. I mean, and I think this is a good example for us instead of always talking about it in basically just in context and giving some people some type of real raw data that goes with it. it makes you understand that really and truly, this is why some people don't want to move, and this is why some people don't want to
Yeah.
sell, because of what the impact is going to be on them on the other end. Now, one of the things that we don't that payment don't take into account that people may be like taking pause on is, doesn't mean that you can't put money down on your loan. Like in certain cases, a VA loan may not be the right move for you because going conventional may give you it's going to give you a lower loan to value, right?
Yeah, that is right. I've actually had a scenario with that where this gentleman wanted to do a huge down payment on a VA loan, but he was just going to get a much better deal because so we went the conventional route because he didn't have to pay that funding fee.
Right.
So with that small loan amount, it made more sense for him to go conventional.
Right. So that's what I'm saying. So people just have to look at it too as and there are seller concessions that can happen where the interest rate could actually be more beneficial. I talked about this today on Instagram, where basically mortgage buy downs are a thing. We are seeing though that type of vehicle being used a lot more in seller concessions, whether from the seller or like new construction lenders and things of that sort right now. And it's kind of making people feel incentivized to actually purchase homes versus not at this point in time.
Yeah. I mean, I could definitely see it. We haven't seen this in about a year. A year, maybe a year and a half, maybe 2 years, where there wasn't seller concessions. People were asking $10,000, $15,000 over asking price. So it's definitely a good time for home buyers to negotiate that.
Yeah, and I think that from a lender, from a loan officer perspective, um, when you see that these people are getting these mortgage buy downs, how does that affect how you go about structuring your loan?
What I wouldn't say it really affects it, because it's a pretty simple process. We can lock in a loan. Okay, they want to buy it down to this amount. All right, cool. We'll lock it in. It just when that happens, it increases their purchasing power. So whenever they buy down that rate, their purchasing power can go up a little bit.
Okay. So so basically when you lock in the rate, the person has to qualify for the full loan at the original rate though, right?
Yeah, that is true.
Okay, so basically in this market, what we're talking about on this VA loan is 5.6. They have to still be able, if they have perfect credit score, 5.6, got $2,100 payment. They have to lock in that rate at that 5.6. They have to qualify for it, then lock it in, right?
Yeah, so that's so a good thing like to take in mind is like I know 2-1 buy downs are hot right now. Do you know what a 2-1 buy down is, Craig, or no?
Oh yeah, I know what a 2-1 buy down for is. So let me break down what a 2-1 buy down is since Oscar asked me. So 2-1 buy
Yeah.
down is basically, if you think about it in this sense, 2 years, 1 year. Okay, so basically the first year of your loan that you're getting on a new mortgage application, once the rate is locked in, you can get 2 discount points on your loan, right? So in this case, if it's 5.625, that loan can go to 3.625.
Yeah.
And then the following year, it adjusts 1% up. Right from there. So instead of being 3.625, it'll be 4.625. And then the following year, if you don't refinance it at a lower rate, it goes back to the original rate of 5.625.
Yeah, that's right. And then the most important thing with that is they have to qualify off that final note rate.
Right. The
Yeah,
5.625.
Yeah, the 5.625 in order for them to qualify for that 2-1 buy down.
So like man, I'm really thinking that this is what we're going to kind of be seeing a little bit more of. I think that's really what's incentivizing a lot of sellers at this point to actually make a move in. So what is your thoughts on what I should say thoughts? What is the advice that you would give people who are looking to purchase homes and trying to figure out if what situation makes the most sense? Going with a VA loan, going with a conventional loan, and hoping for seller concessions, or any other model process?
I would say if you're you're in this area and you're active duty or a veteran, I would say use your VA loan because you definitely earned it. And it's a great product too because it's a government backed loan and has lower interest rates. Um the only thing that I would advise if let's say you want to use a conventional loan instead of your VA loan is if you're going to get a really small loan amount and it'll be a cheaper option for you to use the conventional loan. That's the
So
only advice I have.
okay, so have we seen interest rates fluctuate a lot since last week, or are they been kind of steady?
No, so they actually been kind of steady since last week.
So at the beginning of the new year is still showing the steadiness that we saw heading into the end of the year. So we haven't seen no big spikes.
No.
Do y'all, are you expecting a spike to come eventually, or you think it's just going to sit around here for a little bit longer, like maybe the next 2 or 3 months?
I think it might, sit around here, right around like 5.5% for government backed loans. I know conventional was around like 6.125% this morning. Yeah, I think it might stay around here for, a couple months. I know Chairman Powell's supposed to speak tomorrow. I know that.
So we
So
could see a spike in the bond market tomorrow that can help fluctuate interest rates tomorrow, whether up or down, depends on what he says. And then that may be interesting enough when we come back next week to kind of like take a snapshot and see what happens with the interest rates after this move this week, because that would be a real depiction of if rates can go a little bit lower and get people to lock in at lower rates than they already can, and which could be a big plus and a big boom for getting some of these deals off the market, because we're seeing the pending sales hold a little bit longer than typical, and that makes a few people nervous when it comes down to it, because days on market are starting to extend, and if they're extending and have the roads, that's really something what people are taking note of.
yeah, and it comes down to pricing too. I just believe because I have a buddy who's looking for a home, and he just told me the story too. Like he was trying to put in an offer in a home, and it just sold. It was on the market for one day, and it just went right off the shelf. And I was telling him it might have been just priced right, because usually when homes are priced right and they're in a neighborhood that somebody wants to live in, it will just go off the shelf.
Right. Absolutely. That's why I say that's the main thing when it comes down to it. It comes down to agents actually knowing what they're doing their research, making sure that prices make sense, and going from there. And as long as they're doing that, and you're working with an agent and a lender who can help you, get qualified for the loan, be ready to get your pre-qualification and get your loan process and underwriting done in a timely manner, it's going to fly off the shelf immediately. You're right,
Oh
because
yeah.
everybody's working in your favor.
Yeah, and that's why it's so important to have a good team behind you. You can't have like a bad agent. You can't have a bad loan officer. You need a team that's gonna like be there for you whenever you want. You need a phone call done. They're there for you.
Absolutely. And I think that's a great way to end the real estate scoop. We are giving y'all bits and pieces of information each week, and we're not trying to hold y'all long unless we have a major topic to talk about. So if you have questions, you have concerns for me and Oscar about how y'all feel about this market, things that y'all felt about what's going on with the market, or questions just on your interest rate or anything of that sort, hey, you definitely need to hit us up on Instagram. Follow us both over there. I am Craig Houston. He's at Oscar the Loan Officer. We'll obviously have those linked down in the description. And we're always going to be here for you. We'll see you once again next week for the Real Estate Scoop. Y'all stay safe. Oscar, you have a great evening, man.
All right, you too, Craig. Thank you for having me.
All right, now y'all have a great night.